Hello, hello, hello. It is Tuesday. Is it Tuesday today? The 12th of July at 25 to 6. And I just thought I'd have another look at the charts and show you what I did today with regards to trading the pound Australian dollar. And also, I want to sort of cover some things that might be a challenge for you. It might not be, it might be. I know that there are certain people who are fantastic traders and do, well, they get really good results. And then there's others, and then there's also, you will come across loads of people flexing, driving a Lamborghini, wearing the Rolex watch, possibly fake, who knows. There's all sorts of people out there who are really showing what could be possible with trading Forex. But then there's also the reality is you've got to play it sensible and safely. You've got to be disciplined. You've got to be consistent and hopefully consistently profitable, not consistently losing money, because that's not good. The other day I showed you the auto harmonic pattern indicator, and that seems to be working really well. And I've also added an indicator that I have used previously and sort of forgotten about it. But anyway, enough waffle. Let's share screen and talk you through what's what. So share screen 1. So hopefully now you can see my chart. It's the 5-minute time frame. It's the pound Australian dollar. I'm always trading the pound Australian dollar, but there's still plenty of money to be made. Now, I say there's plenty of money to be made. It all depends on you and your circumstances. Obviously, a lot of people enter into the Forex markets to get rich. And this is not necessarily a get rich quick way of doing things. Because if you over leverage, if you, there are certain people I've seen just slamming the buy button, buy loads of positions. And if it goes their way, they've done really nicely. If it doesn't, then that could be quite costly. But then, of course, there was the other situation where there was that guy that I mentioned in the previous video who turned a $200 account into $190,000 in 4 hours just by closing it was basically $200 that he just didn't mind losing if it went. He had blown several accounts previously, but basically he had started off with low lot size, not a 0.01 micro lot size. And then as that started getting into profit, he would close that and then add another position at a higher lot size, and then just kept trying to add a lot size for the highest that he could on the account as the price was falling. So he was selling, I think it was oil that he was selling at the time. And basically it just compounded massively into, as I say, $200 into $190,000 in 4 hours. So there are, if you're prepared to take the risk, and if you know what you're doing, I'm not saying this guy knew what he was doing because he had blown several accounts previously. He was just looking for something with volatility, and just went for it basically, and it paid off for him. But if it all depends on your situation. You may just want to make, and excuse me for using the pound as currency because I'm in the UK, obviously I will use the pound. If you want to make £10 a day, or 10 insert currency here, if you want to make £10 a day, £20 a day, £30, whatever it is you want to make, you could do that quite easily with this currency pair, using these strategies and using these indicators, because you could do that with just going for 10 pips. And for some of these moves, in fact, let's turn the magnet off. So where are we today? So this was just gone 11 o'clock in the morning UK time, and I know the majority of you will be working and have day jobs and will find it difficult to trade during the day. But you know, there are opportunities at lunchtime. There are opportunities at the end of the work day. But the point that I was going to make was, for example, from this point here, you could see, or I don't know if you can see actually particularly clearly, because there's a lot going on now. This is with two indicators. So I've got my normal trend line moving averages. So that's the 200 moving average or the 100 smooth moving average. And then I've got a couple of other ones in there that just help with identifying trend direction and also a confirmation that yes, what I'm doing is correct. So for example, if you're at this area here, you can see that you've got the stochastics. And again, if you just use the standard basic stochastic, you can see that down here we've got a good opportunity with a nice cluster of 4 out of the 5 timeframes down in the extreme. And then you can see that I moved up. So we're looking for just 10 pips. So, excuse me, well, that was sort of halfway up that. So to there is 45 pips. So can you get 10 pips in that? Yes, you can. I'm so sorry. Please forgive my cough. It still hasn't gone yet. So you've got that opportunity to make 10 pips there. So that's that one. And then you've got this opportunity at the top here. You've got, this is from the higher high, lower low indicator, which just basically pinpoints the lows and the highs. So where you've got a high there, you've got a low, you've got a lower high, a lower low, a high, a low, a lower high, a lower low, a lower high, and so on and so forth. It's actually quite handy to have in addition to the auto harmonic pattern indicator, because you know, it just clearly points out, okay, that is a low, so we're kind of expecting price to push up from there. So from this opportunity up here, you've got a rejection off the 200 EMA or the 100 smooth moving average, and then down to that point there, you've got 60, nearly 70 pip drop down to that point there. So could you get 10 pips from that? Yes, of course you could. So, you know, and that was, what sort of time was that? 12:20, so around lunchtime, certainly in the UK. Most people probably go for lunch at 1. So 1 o'clock is this point here. So would you be happy to potentially place a buy around that sort of area with, you know, kind of thinking that it's going to go up? Possibly. I mean, you would, for example, at 1 o'clock, so, which is that candle there, if you were to place a buy there and then you go, oh no, come into some drawdown, okay, 15 pips drawdown, not great if you're only going for 10 pips, but then actually it did push up from that point 30 pips pretty much to the high there. So yes, you could grab 10 pips, and if you were using a lot size of 0.10, that would be £1 a pip, and you could get £10. That would be fairly standard and not risking too much money. But if you're starting off with a small account, I normally recommend or suggest that you would trade a lot size of 0.01 per 100 in your account. I have seen other traders suggesting that you use a 0.05 per 100 in your account, because that was aimed at people who have more experience, so not necessarily for beginners, because as soon as you start trading at a 0.05 and the trade starts going against you, that mounts up quite quickly and can damage the account size quite easily and quite quickly. So whereas with a 0.01, you're not necessarily going to lose that much money. But a lot of people will be looking at that going, well, that's just going to take me forever to grow my account. Yes, it will if you continue to just use 0.01 until you get to a point where you're using 0.02. So if you've managed to grow your account from, say, £100, $100, and double that up to 200, and it is fairly straightforward to double your account, but I don't want to say that as if it's easy. It is simple. I've done it. I know other people who've done it in a short space of time. In fact, I think the most recently I did it in 2 weeks. So, you know, if you could double your account quite easily using proper risk management, and you know, not necessarily going for these huge, you know, oh, I've caught 100 pips, 200 pips, whatever today, just by using these small moves. I'll say small, that was, what was it, in 70 pips. You've got opportunities on this pair, and it moves quite quickly. So, which is another reason I like trading this pair. So you've got the opportunity to make money, and you've got the opportunity to take your profit fairly quickly because of the speed that this pair moves. So yesterday, actually I won't go through yesterday too much. There was a harmonic pattern that had produced this fairly large scan, and you know, you can see that we had a decent push down. This has now generated this new scan from this area. So we've got a low there, up to that point there, down to that point there, up to that point there, and then down to where we've just had a recent low over here. So not this one that's marked as low, but this lower low here. And what I've actually enjoyed about using this indicator is I don't have to worry about drawing out the harmonic pattern on the chart. Plus, with the addition of the higher high, lower low indicator, and then I've also got the support and resistance dynamic tool on here as well, tool indicator. But the challenge is, as you can see, I'm scrolling to the right a bit here. You can see that this big shark pattern here is in red, and we've got then these targets in red here, and we've got these smaller patterns here. So you've got the X, A, B, C, D on that one there. So you've got the D point at the top there. You've got the 200 EMA. You've got the high of the higher high, lower low indicator. You could see that you've got the stochastics on the 5-minute time frame up in the extreme there, and you can see the RSI is also up quite high at that point as well. And then also you can see at the top here, you've got the vortex with the red crossing above the green. So several confirmations there that, yeah, great, get into that for a sell. And say that moved for 70 odd pips, brilliant. But it does get a little bit confusing when you've then got, okay, I've got this pattern here, and then I've got another pattern that's formed here. Which one am I looking at? So you can just about see on there that says D there. So you've got the D at the bottom. So we've got a pattern there that's starting at that low, up to that point, down to that point, up to that point, and down. So it's only a small pattern. So the entry, suggested entry provided is here. And then you've got a target 1, target 2, and a target 4 on that. Now it's hit target 1, and I only noticed this today, that when target 1 got hit, it was actually the same sort of size as where it says here target 2 and target 4. As soon as it was hit, it went small. So I don't know if, I think the other day I was showing this as an example, whether it gets that small that it disappears. So yeah, I don't know. So we've got, again, target, for some reason target 3 is small there, target 2, target 1 is in there somewhere as well. But that was from this pattern here. So again, you're looking for your target 4 was down here. It didn't quite reach that far, but even if as we said, that was 70 odd pips just on a 5-minute time frame from that pattern there, bouncing, getting the rejection off there, stochastic up in the extreme, RSI gives us a nice little point at the top there, and we get a crossover the red and the green on the vortex. So the opportunities are there, and then we've got this large sort of shark pattern here now, and it's given again the entry or suggested entry points, the suggested stop loss targets of 1, 2 there. Whether that will come into play, who knows. I have been quite happy to just take some, and I haven't let these run all the way, but I've taken profits as and when I feel comfortable. And I've added 6.4% to the account today. Yesterday was just below 6%. That was 5.82. So, just adding, if it was 5%, well, some people, I think I saw one guy the other day, he said he just aims for 0.5%, which I found a little peculiar, but it's not my place to say. You do whatever you're comfortable with. You do whatever you feel is the most appropriate for your trading style, for your what's the word? However you feel towards risk. Some people would be happy to let their account go into almost 50% drawdown, just because they are confident that the account, the whichever way they're trading, is going to turn and go back up the other way. Personally, I'm happy to just take the profits as and when I feel comfortable, and I'm doing quite nicely with that. So, excuse me. So there we go. There's the indicators that I'm using at the moment. Yes, it does look a bit busy on the chart with these multiple harmonic patterns, and I was paying for a scanner. Well, in fact, to be honest, I still am paying for a scanner. I don't use it as much now because the scans that are appearing, stop saying scans, harmonic patterns that are appearing on TradingView with this indicator seems to match up with those quite nicely. And yeah, this is all, it's flowing really well. So I'm quite happy with this at the moment. So we've got several points here of the trend color fill I've got in here. So it's orange when it's above, and it's white when it's below. And you can see that as prices crossed over here, we've had several pushes towards the or tests and bounces off the 200 EMA or 100 smooth moving average. So you see it pushed up there, it's created another high there. It's come all the way down. We've had, so that was another thing I should have said as a reminder, that normally when price crosses below this moving average, you should be looking for sells really, rather than just buys. But at some point it will buy in order to go back up and across that moving average again. If we were to look at a different time frame, it may well be that that's not below the 200 EMA. So stick with the time frame that you're comfortable with. I know someone else was commenting saying they like using the 5-minute time frame and this currency pair. And to all 4 people who watch these videos, I hope you're enjoying them. I hope they're of benefit. I do know that everyone does things differently. Everyone will look at the chart, they'll press the buy button or sell button at a slightly different time, because someone would be looking at that and then thinking, well, I'm just not sure, for example, if I want to sell that now. I may just wait for just to make sure it does come down, rather than it just being a pullback and continuing up. Things like that, which I completely get. So we're not all going to be making the same trades or taking the same trades at the same time. And that was where somebody suggested, why don't I set up a WhatsApp group or Telegram channel or something like that? And to be honest, I don't know if that's wise for me to do that, only because it's additional work that I'm not saying I don't want to do. I have done certain things like that in the past, and I might even do some live sessions rather than these end of the day reviews, as it were. But if you take trades based on what I'm saying, I might be happy with the risk, but you might not be. And you take the trade and it doesn't quite go to plan, and therefore you're going to be a bit grumbly with me. So that's one of the reasons why I wouldn't really be comfortable doing that. But great idea, great suggestion. But there are so many other signal providers out there that offer those services. And yes, they're some of them do free ones, some of them do paid for, but I'd be quite happy to just carry on doing this, maybe do some live sessions as well, rather than just talking you through what I've done during the day, because I know that somebody could call BS on it. They'll just go, well, you're just saying you did that, you're not showing us any proof. And I'm not showing any proof because I know there's loads of people go, well, if you're doing or winning these trades, then why not share the proof? I would happily, in a way, share the proof, but I'll give you an example. For one reason, this is my personal account, and for two, I'm doing this because if there's anything that I'm doing that can help others, then great, like sharing the indicators, sharing the way I use them. But I don't need to do this to prove to anyone. I'm just doing it to see if I can be of any help to anyone. So yesterday, for example, I took 23 trades. I didn't win them all. I closed some of them out at a loss. But I think I ended up with a 65% win rate or something like that, but still added 5. Yeah, just shy. Do you know what? I can't remember now. I'm getting myself confused with what I did today. And today was just over 6%. Yesterday was just below, I think. So today I have placed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades today. And 3 of those I have closed at a loss. The rest of them were, so 16, I did say 16, 16, so 13 out of 16. So what's that? 13, 16. So there's an 81% win rate on that. The win rate, is not proving anything because they could all just be like a profit of 0.01. So, that doesn't prove anything really. But the win rate, I'm doing okay. Yesterday, I was a bit gutted because I was actually selling. I think I was selling from around this point here. And this spike, I don't know what happened here. There was this massive spike down, even though I don't think that, I think I went and checked. There wasn't any news, but it was at 1:30. And sometimes there are releases or something comes out at 1:30, but it was just literally a sudden big wick down and then pushed up. And yeah, I think I was selling from that point there. And this was obviously before this harmonic pattern had arrived, because I was looking at the stochastics being a fair chunk of them, time frames being up in the extreme. But yes, of course, I know I was above the 200. The blue moving average there was way above the red one, so why would I be selling? I sometimes do that. I sometimes do that with anticipation that it's gonna move, or I'll capture some of the pullback. And when that spiked down, I think I can't remember how many pips in profit it was, but it was a lot. And I just didn't get to it in time to close them all out in profit. I closed some of them out in profit, but the others I closed at a loss and then reassessed once we got up to the top here. Then made some of that money back, so it was fine. But yeah, it was strange that one situation at 1:30 yesterday. I tend to check my FX book for news, but I couldn't see anything, couldn't see a reason for that sudden spike downwards at 1:30. Maybe you guys know what it was. I don't know. So I feel I've waffled a bit. I've covered lots in this particular video. So I hope these are of help. If they're not, please feel free to move on. But if you do enjoy these, please do hit the like button. Drop me a comment if there's anything in particular you'd like me to cover. And obviously, please do subscribe if you haven't already. I'm not trying to make money from YouTube from doing this. I'm just trying to share what I'm doing, and I hope it's of help to anyone else, any 4 of you that might be watching. So that's it. I'm going to stop sharing now. I'll catch you all on the next video, whenever that may be, and I hope you continue to stay well. I hope you continue to stay profitable, and don't feel you just have to trade the pound Australian dollar. That's all I do. There are many other currency pairs out there, and don't forget, this is all just for educational purposes. None of it is any financial advice in any way whatsoever. You have to do what you feel comfortable with. So I can't tell you what you're going to be comfortable with. You can only make that decision for yourself. So stay well, stay profitable, and stay on track. Yeah. Catch you later then.